Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 News studios. I'm Prashant. With me, my colleagues Sonia and Nigel. And after some time, I must say, we're a full house. Morning, guys.
We are a full house. Morning, Prashant. Morning, Nigel.
Morning.
And what about the rains?
Out of nowhere.
Generally, you know, I love the rainy season. I love the monsoons. But this time, it's just come out of turn. And it's kind of just, it's a wake-up call about climate change, about unseasonal rains, the impact it would have on the crop, etc. And it's kind of scary, right? I mean, with the kind of volatility that we're seeing in terms of the weather.
Well, that's right. I mean, and in a few minutes, if you got off the sea link, it was, already a bit flooded as well. So difficult times, right? I mean, you have 30 minutes of rain and to see some... No, not great morning.
Not a great feeling. No, not at all. But for the market, I mean, there's a bit of a relief rally, right? So I think that should help.
A little bit of relief rally, but, it's just kind of on tender hooks. And I think it's been that way now for the last, almost 2-3 weeks now, I think more. It's been some of the most volatile markets that we've seen in a long, long time. I mean, I think not in terms of the depths of the crisis, but in terms of volatility, this would be up there with, some of the days of 2008, etc. Anyway, last night was a bit more calmer. So we got a bit of a bounce in US markets. The S&P was up about 0.9%. The Nasdaq was up a little lesser. The European market indices staged the real comeback. I mean, they were all kind of smashed up on that 81 issue. But, the indices ended, the Euro Stoxx 50, the benchmark there ended about 1.3% in the green, which is not bad. Now, there was, of course, some reassurance from central bank leaders, etc. But also, latest data shows that there was no major take-up on the new central bank swap lines. Remember, a few central banks had come together, most prominently the US Fed, developed market central banks had come together on Sunday and basically said that we will be ready to offer swap lines in terms of liquidity help to anyone who needs. And the latest data shows that there has not been much take-up on that. There were worries because, remember, last week we were discussing how the Fed discount window was seeing a lot of borrowing. Money was moving out of equities, etc., into money market funds. The highest quality money market funds basically showed risk aversion. But the latest data, at least from the new swap lines which were announced on Monday, the emergency swap lines which were announced, shows little by way of take-ups. I mean, you can read this to mean that maybe things are thawing a little bit. Now, the waiting game starts for one of the most keenly awaited Fed meetings. I mean, every Fed meeting is keenly awaited, but this one is also the toughest for the Fed itself because they have to choose now whether they want to slay inflation with more rate hikes or they want to basically deal with one of the severest banking crises we've had since 2008. We've not had this kind of upheaval in the financial system, which is the heart of any sort of economic system since 2007, 2008. So a rate hike, some say, well, yes, 25, others say maybe we get a pause. There are various permutations and combinations. Maybe they hike by 25 and say, now we'll wait and watch. Maybe they don't do anything and say, well, we're not doing anything now, but maybe in the month of May we will. So that's the Fed. And I think over the next 2 days till we get the decision, there will be a fair bit of chatter around this. And this is an important one. We'll discuss more about this. Now, the Nifty coming to the market here took support at the 16,850 level. It's a downward sloping channel. And the market took support almost exactly, I mean, a little lower than that, but at 16,850, it hit that level and then bounced very sharply, almost a 150-point bounce from the day's low. There are enough and more resistances. It's been sell the rallies kind of a market for a while now. So 17,145, 17,200 are the immediate resistances around which the market will find some selling pressure. Let's see if you're able to take those levels out. The market has come off here quite a bit as compared to markets out of which some of these problems are emanating. I mean, the S&P, for example, is absolutely flat since the Wednesday before last when all of this began, whereas the market here has lost almost 6% in value. So keep that in mind. Bank Nifty is doing much better. It's been making higher lows. I mean, yesterday's low was higher than previous day's low and and so. For 2 days now, it's been making higher lows, which is a good thing, stronger than the Nifty. On the way up, a reversal level in which basically a short-term reversal level, flipping from bearish to bullish, at least in the very near term, would be 39,780. So keep that in mind. And on the way down, the recent low of 38,613 must be protected. So just a way to kind of set up things in terms of how you want to think about the markets. It's still very fragile. People have burned their fingers, and they'll be looking over their shoulders to see if there is another set of bad headlines or bad news which is going to hit us. The SGX so far is indicative of a 70-point up move. Sonia, hi.
Absolutely. I mean, there's definitely caution on board, right? I mean, a classic indicator is the FI short positions. It's the highest that we've seen in a very long time. An indication that perhaps, there is still a lot of risk aversion left towards equities. In fact, this morning, you may see a relief rally. No two ways about that. But will it get sold into, as has been the case over the last many days? That's the big question. So there's definitely caution once again in the system. But there was a relief rally across the US markets. The Dow was up almost 400 points, and that's largely because of several banks coming to the aid of First Republic. So 11 banks together have now deposited $30 billion into First Republic, and now there are other options that are being considered, including investing into the banks. So banks like JP Morgan, etc., have come forth, and they are considering to put more money on board in order to bail out First Republic Bank. So those efforts are what caused a little bit of a relief rally, but the bigger question is that whether there are more banks like First Republic that are in the wings waiting to sort of show up and cause further damage to the banking system. European markets also saw a bit of a relief rally. The DAX was up, the German DAX that is. But let's not forget that the Nifty now is very close to the September 2022 low of 16,818. That has been a firm line in the sand, which hasn't been broken up until now. So it could be a bit of a support for the market in the very near term. Time will tell. But the mood is definitely cautious. In the last 11 trading sessions, FIs have sold over 11,500 crores. It's heavily short. The shorts are pretty high in the system as well as far as FIs are concerned. For the Fed policy, the expectation was a 25 basis points rate hike, but now there's also talk on whether the Fed may pause this time around, considering that there are other issues to cater to, like the banking crisis in the US. So let's see what happens. We won't have to wait too long. Tomorrow the FOMC decision comes through, but until then there could still be a lot of volatility in the system.
Well, that's right. Sonia, you mentioned a couple of times about how the FI is aggressively net short. Will that call for an aggressive reaction? If you get any spurt of good news, maybe in fact we could see a big rally from here, given the fact that the 16,850 odd mark has held out. Now let's give you a couple of cues. Yesterday we ended off where we really started. So we started closer around the 17,000 odd mark, and we ended off closer around the 17,000 odd mark. Now today the global cues are looking a little bit better, but part of that would be factored in because yesterday we recovered 150 points from the day's low. The FI net shorts, they're at record levels. The bulls though, they are coming into fight at around 16,830 to around 16,850. And we have seen that in the last few sessions. What did the FIs do yesterday? Well, we had a relief rally, but they added more than 20,000 short contracts. That takes their short positioning to more than 90%, added around 91% odd. And I was looking at the net short positions. I have never ever seen, I think this is a record number, close to around 200,000. 194,000 is what the net short positions, that's the short positions minus the long positions. Even when the pandemic broke out, at that time it was around 170,000 odd. So it's the highest net short positions that we've seen from the FIs. What do they do on index options? Well, they bought puts yesterday, 40,000 put contracts. The problem is that at higher levels, they continue to write calls. And yesterday as well, they wrote close to around 100,000 calls. A couple of strikes that were active, the 16,900 call as well as 16,900 put. Very, very active. Maybe some part of the street is playing for that range of around 450 points, 200 points higher from that 16,900 odd level and 200 points lower as well. Crucial levels to track. 20 DMA is far away, so the near-term resistance comes in at around 17,150 going by the options data, while the support level 16,830 to around 16,850. The Nifty bank is going to be very, very important because it's bouncing off that 38,800 odd mark. But the 200 DMA, if the Nifty bank can get close to that 200 DMA and hold about those levels, then we are bracing for a bit of a short covering bounce. I don't think you chase the opening, but maybe you look to buy the dip with the stop loss that we've seen, the recent lows, 16,830 to around 16,850 odd. SGX Nifty is suggesting a 70-point uptick.
Okay, let's see how it goes from here. By the way, there's really steep falls that you're seeing in the US markets. I mean, First Republic was down 40% in one session, right? I mean, that's surprising, but it doesn't surprise us anymore. I mean, with the kind of collapses that you're seeing across the board, but it was still a really steep fall that you saw in one single session. There was a 40% slide on First Republic, but lots more coming up in the next 2.5 hours. Before we start, let's tell you what's lined up in the first half hour of the show. We'll get you updates from the market across the globe. Arvind Sangha of Geosphere Capital Management will be joining in to discuss the trade setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At around 8:30, we will do a fundamental stock analysis with Prakash Diwan as well. All right, on the equities front, first up we have Venugopal Gare of Bernstein, who says that we are heading into a different kind of downturn. While various macro indicators will see a slowdown and these factors tend to show the worst values after the peak of a crisis, the trend and magnitude point to a significant variation from 2008. The problem will be less deep but will last longer. Even from a recovery context, they are looking at a U-shaped recovery with less pronounced depths instead of a V-shaped one.
All right, so money market views as well. Bhaskar Panda of HDFC Bank says risk on sentiment is making a comeback post-handling of banking crisis in US and Europe. He says the dollar index is trading near 103 pivot as of now. He says oil prices remain subdued, which is positive from an India point of view, and adds once things settle down, volatility in the dollar INR may come down, and he expects the pair to settle below the important 83 to a dollar mark. Bhaskar expects the dollar INR pair to trade in a range of between 82.45 to 82.65 for the day.
All right, and on the bonds, you have a comment coming in from Bhaskar itself. He says that the Indian bond yields have eased a bit, tracking US yields. Oil also remains lower, and given this, he expects the 10-year benchmark bond yield to trade in a range of 7.3 to 7.35% for the day.
All right, so we got the calls in, money market calls in as well, but let's run you through the important stocks that you need to track in our special top 10 segment, which we'll get to in just a bit. We're looking at Bharti Airtel, Adani Enterprises, ONGC, Oil India, HDFC EMC, PVR, UTI EMC, J Kumar Infra, PNC Infra, and Sterling and Wilson Renewable Energy. They are stocks on the positive side, and there are no stocks that we're bracing for which will react to negative news.